to call this a market structure, right? Or call this some sort of trend or higher highs or higher lows, or determine what the trend is within this price action, because we already established that it's basically we have 59.4K daily supply. We've had this marked out for quite some time now. We came up, we tapped it, we got rejected, right? And we have 50.6K daily demand. As long as we hold that, there's really not too much going on here. Expect anything in between here or here. Once we break out, things start to look very good. It starts to look like we're gonna make a new all-time high. We can start targeting these fibs. 74K probably is on the table. That's most definitely an opportunity at that point. And if instead we lose this daily demand zone, then we fall back towards our lower demand zones, right? Then we can start discussing possibilities of, a bear market or a much bigger downtrend, things like that. This is breaking down. We're losing structure. We're losing trend. Our 4-hour 200s have now been likely curled over at that point if we lose these levels. So now things start to look scary. We target 47K again. That's what we targeted last time. Saw a perfect bounce before the reversal. We target 47K. We look for lower, and our next daily demand zone is 40K, where we also have our 200 daily EMA and our 200 daily MA. Right, so I'm seeing a bunch of people call for downtrend into this zone and then reversal all the way into new all-time highs. Understand that if we are getting down to this region, yes, it is major support. It is high time frame support. It is strong, untested demand. And we have our major 200 daily moving averages as well, right? So we have to downtrend in order to get down there. What was that, TradingView? We have to downtrend. We have to flip the trend bearishly in order to come to this level, right? So that is, this is still okay. Even if we came all the way down into this region, it still looks favorable on the macro. Once this region is lost, then I think it's safe to say we're in a bear market at that point. Then I think it's safe to say this is consistent, lower highs, lower lows, and we don't really have any sort of bullish argument to be made here. And all of a sudden, bears are no longer dumb, right? And that's simple. It's simply that's the way to put it. And we've been saying this, but we've been saying this for the 4-hour chart. Right? Obviously, a drop down to 40K to fully shift your mind is not too helpful. We don't want to have to wait another 24% to finally decide, whatever the trend is. So our 4-hour 200s have been the key sort of watch point since then, or in the meantime. And that's simply because these 4-hour 200 moving averages have consistently been acting as the local bottom for the majority of this uptrend into 65K, right? So 4-hour 200s consistently acting as local bottoms. As soon as you lose them and bearish retest them, that should send off that signal. This is now a different environment. It's no longer higher highs, higher lows, bears are dumb, and that's it. That's the only argument or discussion that we're willing to have. Now there's other arguments to be made. There's more things that are worth discussing. That's the first light bulb, right? So from there, when we start trending, when we go from trending strongly upwards, higher highs, higher lows on every single time frame to now we're trending lower lows, lower highs. We're using these 4-hour 200s that were previously local bottoms as now local tops. That's when the bearish downtrend really starts to pick up momentum. Then from that, instead, what we got was chop. We got sideways. We got, oh, look at that. We're respecting the 4-hour 200s as local bottoms. Then we respect them as local tops. And now we're going to disrespect them entirely. We're going to chop above, below, and in between consistently and over and over and over again. I'm not sure why my 4-hour demand zone is not drawn here, but we're going to go ahead and draw that out. 4-hour demand, I believe it was right here. Yeah. Give me 1 second. I'm just gonna redo it. Is this not drawn for the market update? Probably wasn't. But yeah, so it's just simply chop above, below, in between these 4-hour 200s. Expect anything between 59.4 to 52.4. It's about a 13% range. Anything within that range is possible. So for me to come in here and say, an uptrend or downtrend or whatever, that's not fair. It's not fair to you guys because it's not true. It's not probable. There is no really tell in what the probabilities are. It's if we're below the 4-hour 200s, we're a little bit more likely to head down to 52.4K. If we're above 4-hour 200s, we're probably a little bit more likely to head up into this 59.4K zone instead, right? And we're getting that, but just very odd, very choppy. This is meant to, I mean, literally, guys, my entire Twitter feed is every time we're above this level, it is, oh, look at that, new all time highs soon. You're all dumb, right? And then every time we're below, it is, oh, we're heading to 40K every single day. So I hope that just the titles of the past few market updates for the past 2 weeks or so have been keeping you grounded to where you're not falling victim to the chop because we called this. We've been expecting this and we're going to continue to expect it. Just like when the trend is clearly a trend, we anticipate the trend until it's no longer there, until the trend no longer exists, right? We've been saying that for the entirety of this move upwards, all the way from October to just recently in April. We were yelling. You heard me come into these live streams and say, Bears are dumb, Bears are dumb, Bears are dumb. This is clearly an uptrend. I'm going to keep looking for more uptrend. Then when we break below, you hear me say, all right, look for lower, anticipate lower. If we see strength in the meantime, then that's fine. But now that we're here, the trend is not having a trend. So we will anticipate not having a trend for the entirety that we don't have a trend, right? It's just that simple. Don't overcomplicate it. If we find a trend, if we can break down between or below certain levels, right? Or if we can break up above certain levels, then we can start saying, all right, it seems very clear that the market has made up its mind. But until then, it's just more logical to anticipate the chop for the entirety that you see chop. And that's it. Someone said, I was talking to a buddy, and someone said, yeah, the 9 to 12K zone on Bitcoin, this whole region lasted for 2 months. And it was just chop. There is no trend here. It is sideways. The market can remain irrational for longer than you can remain solvent, and it can also remain choppy for longer than you can remain solvent as well. So anticipate whatever the trend is, and at the moment, the trend is not having a trend. Deviations towards the downside, deviations towards the upside, sideways, right? You don't even really need price action to see it. Our 4-hour 200s, which we heavily rely on because of how well they get respected, they do a very good job of showing us what exactly is the trend here compared to all of this. It was very clearly up. Now it's very clearly sideways. So that's really about all the analysis that you should truly need for Bitcoin. There's truthfully not too much else to say. Take a look at the hourly, but I don't really have anything here for you. All I can say is we chopped up above the hourly 200s. Seemed likely that we would have to head up to this region again, and instead we broke down below. Bearish retested hourly 200 MAs, and we've been selling off ever since. So yes, just like yesterday, how we said, as long as we're below these 4-hour 200s, below this 57K demand zone, now using it as supply, And we also have a POC, point of control. Oh, it's over here now, but it was, or wait, hold on. Might be if we draw like this. Nope. It's up here now with the price action that got traded yesterday, but it was this level here. So we said, hold on, wait, am I tripping? One second. There we go. That's what I was looking for. All right, so it's the range as a whole, and it's the POC. It's this red line, and all that stands for is point of control, meaning when you're above it, you're more likely to say that bulls are in control. When you're below it, it's more likely that bears are in control. And we can see that, and it acts very well, right? We see it get used as support here. When we're above it, we're kind of seeing these higher pushes upwards. Once we lose that region, we see very drastic sell-offs. Test this region as resistance, drastic sell-off. We're above it, up move. Below it, sell-off, right? So now that we're below it, what's stopping us between coming down to this 52.4K region? Probably not much, right? Probably not too much stopping us. Exact same um, analysis that we made in yesterday's market update. I see someone unmuted your mic. Any question? Nope. All right. Server muted you. No hard feelings. All right. Let's move on because there's not much else to say here. Let's move on to ETH BTC actually. All right. So our analysis, high time frame for ETH BTC, holding up quite well, I would say. We said we kind of just want to play this level by level on the weekly time frame, just simply meaning when we're above this weekly zone, which is the key pivotal level, we're above that region, it seems very likely we'll head up to this next weekly level. We're above that, seems very likely we'll head up to this weekly level. Above that, next weekly level, above that, you're likely going into all-time highs, right? So as long as the weekly is still uptrending, and then all of your lower time frames are also uptrending, what's stopping you from coming up into this weekly zone? Probably not much. There's not much of a bearish argument. Once your 5 minute goes bearish, and then that 5 minute sees a downtrend that makes your 15 minute go bearish, and then that 15 minute downtrend leads into your hourly going bearish, and then your hourly to your 4 hour, and then your 4 hour to your daily, and now all of a sudden, all you have saying is that your weekly needs to find a higher low somewhere higher than this low, right? Because your 5 minute, 15 hourly, 4 hour, daily are all bearish and downtrending, making lower highs and lower lows. Right? But until then, if every single thing from the weekly to the 5 minute are all saying higher highs, higher lows, and continuation upwards, then there's not really any reason to deviate away from that. So our weekly, obviously very bullish. Our daily, also very bullish. If today's daily candle closes as it is now, take that with a grain of salt because we still have about 5 hours left. But this would be like a bearish doji. So keep that in mind. Bearish dojis are typically reversal candles. If we saw something like this into this weekly supply zone that we had drawn, that would be ideal. That's, take profit, expect some sort of pullback potentially. But just take it for what it is. Currently, the unclosed candle is a bearish doji, so that's a very speculative analysis to be saying that 5 hours early. But just keep an eye on it. If it does close anything like that, then that is sort of implied. So daily, still very bullish. Higher highs, higher lows. 4 hour, 4 hours also very bullish. Higher highs, higher lows. This is your higher low. This is your higher high. If you instead make higher low and then lower high and then downtrend, then you can say your 4 hour is downtrending. You can start looking for a deeper pullback. If you crack this lower low, or I'm sorry, I am all over the place. I know I'm confusing a lot of you. If you crack the higher low with a lower low, then that's also a break in structure. You follow that up with a lower high, anywhere lower than this high, you have downtrend. So until that happens, what's telling you that this high is not any different than this high or this high or this high or this high? Probably nothing, right? So the context of the situation would be, oh, if our daily candle closes as a bearish doji, maybe this high is different than this time or this time or this time or this time or this time. But until then, you don't really have an argument for why it would not be the exact same as it was previous times, right? The trend is the trend for as long as it remains the trend. That mentality, it could be very wrong here and now, but it's the same mentality that we've been applying for all of this uptrend. So it shouldn't matter too much, right? So that's the 4 hour. And then the one that's really interesting is the hourly. Hourly 200 MAs consistently acted as this sort of local bottom for the majority of this uptrend, and we have not seen them tested anytime soon. So if we did get a very strong pullback into hourly 200s, and if we had any lower time frame confluence to go along with that, maybe there's a tiny little demand zone here or maybe here, then that would make for an ideal sort of buyback zone. And then if we see these hourly 200s get lost and they go from acting as local bottoms to now acting as local tops or resistance, then we can probably say that the daily downtrend, that daily candle, the 4 hour break in structure, the lower low, all of that stuff is probably going to remain that way for quite some time. And we can target lower, right? Now we can target the weekly zone getting back tested on a bullish retest. We can target this little hourly demand zone. We can target that hourly demand zone, because now we're seeing that hourly 4 hour are all downtrending and the daily closed bearish and we lost our trend. Right? Until that happens, not likely that we see any of these regions. If we see that start to develop, then probabilities start to shift in the favor of bears. But currently, nothing's saying that bears have really any argument. So that's ETH BTC. Just playing it weekly level by weekly levels done us quite well. And we can move on to ETH USD. All right. So I come in here and I say, bears are dumb, higher highs, higher lows, price discovery. Look for stupid, crazy high fib targets. Someone asked me for what's my target for ETH. I say 2200. We break 2200. They ask me what's my new target. I say 3600. We break that. They ask me what's my new target. I say 4900. Everyone thinks I'm absolutely insane. And then 3 days later, ETH goes up 40%. And everyone's like, wow, I can't believe we're up here. Right. And then we go from, wow, your 4900 call is crazy to, oh, I'm looking for 10K ETH tomorrow. So it's just that mentality of, if we're uptrending, especially when we're uptrending into price discovery, you are more speculative, assuming that this is going to be a top, or this is going to be a top, or this is going to be a top. You are speculating because the probabilities are actually out of your favor. So it is less likely that you sell ETH and you call the exact top than it is that we just continue into more price discovery, because that is the trend, and that has been the trend for quite some time now. All of this price action, consistent, higher highs, higher lows, bears are dumb, price discovery, fib targets. And I'm out trading a lot of the sort of middle of the bell curve people that are trying to call top and then buy lower. call top, buy lower, call top, buy lower, over and over and over again. So I'll be honest with you. Without applying this mentality, there's no way I hold ETH from, $100 to 4,000 without capitulating and then trying to buy back lower, capitulating, trying to buy back lower. There's absolutely no way. I have out traded myself just by sort of dumbing down my IQ and looking for 2200. We break that, look for 3600. So nothing's changed here. That's the point. I know I come into this live stream and the ETH USD analysis is the exact same every single time. And sometimes it's been amazing and sometimes it's not. But that's the mentality that has gotten me to where I'm holding ETH at 40.26. So why would I shift away from that? If that's what's working, then there's no reason for me to deviate away from that. And of course, the 4-hour 200s, I do this ETH USD analysis a lot, guys. So I'm going to kind of fast forward this. 4-hour 200s are the pivotal level. Unless we're trading below them, you really don't have a very strong argument for why this would pull back very heavy or why this would be fully topped on something like the macro or why ETH USD would enter some sort of bear market or anything like that unless we're trading below the 4-hour 200s. Once we get that, then your arguments actually become worth talking about. They're worth discussing. Until then, there's nothing saying that this is going to be a top. Along with that, there's nothing saying that we even pull back into these 4-hour 200s that very often get respected as local bottoms, as long as our 4-hour chart is still consistently making higher highs and higher lows. This is still a higher low. There's nothing telling me that there's weakness here. So as long as strength remains strength, I'm going to anticipate higher low, higher high, more price discovery, bears are dumb, that whole thing. If we instead make the lower low, we're testing demand zones, we might get a nice little bounce, we get a lower high, maybe come back down. That's when you can say, all right, lower low, lower high, downtrend, we might pull back into these 4-hour 200s, right? That's when you can scrape some profit off, whatever you didn't get to take off because we didn't get up to this 49.26 level. We're losing trend, we're now downtrending. You can start looking for buy targets lower, right? So that's really the only analysis that you need for ETH. Hourly chart, I'm not sure if there's anything here for us. Hourly 200 MAs looks like we might come down into them, but they haven't really gotten respected too well. Price action is pretty choppy. Used them as local tops quite a few times and then never really bullish retested them anywhere in this move upwards. So how much strength can we give them? Probably not too much. They're not, notable on this time frame. I will say we do have hourly demand at 3580-ish. And that's kind of just the supply that we formed at this 2.618. So now if we backtest the supply zone, then we might see it hold up as demand. So it's going to look like this fib is holding up as support, but really it's just the supply that we've used or formed at this fib is holding up as support. That's if we see a pullback, if we break structure, if we test it. So key zone to watch out for, key zone to watch out for. And in the meantime, nothing saying that the market structure will break or the trend will break bearishly, nothing like that. All right. So I'm going to let you guys take over, but first, I wanted to go over what I think is a misconception throughout these live streams. So I need a blank white space. So I want everyone to be on the same page here for these live streams. And just recently, I saw someone say, I'm not getting any value from the live streams because all I really do is come in and sometimes Mercury says, oh, I'm taking this trade, or he draws a setup and he says, I'm not taking this trade. I want you to understand any setup that I draw, and any setup means anything like this, where I guess we can't really do this, huh? I didn't plan for this. But anytime I pull out this tool that has the green and the red, I'm drawing a setup because the setup is there. And so in trading, the three things that you do that sort of determine trades, there's one is your personal portfolio. Your personal portfolio, your financial situation. How much money do you have invested relative to what's your living situation? Stuff like that. This is the most important part to understand. Second is risk to reward. That's number two. Third, probabilities. Your personal portfolio, risk reward, probabilities. When you mix these things together, that's when you have investments, that's when you have trades. These two things, these two create a setup. So if I draw a setup, it means I'm finding a position where risk reward and probabilities make sense. If I say I'm not taking the setup, it means my personal portfolio does not agree with me taking the setup. So if your personal portfolio allows for you to take the setup, it's a valid setup, so you can take it. If I say I am taking the setup, it means that they do match. So I'm allowed to take the trade. So for example, the EOS trade that we took in yesterday's live stream, I know everyone's hyped up about it. I said I was taking it because, and I remember specifically saying, in the dump that happened, I wasn't buying dips. I personally am very exposed to the crypto market relative to what I usually am. So I personally, for my own portfolio, do not really have a lot of room to buy dips and still remain comfortable. So I said, I'm buying the EOS trade, and that's me buying the dip. So that way, later on, if we bounce and someone comes up to me and says, "Oh, you didn't buy the dip, you're dumb," or whatever, then I can say, I have exposure to this dip. If this dip ends up being some sort of local bottom and we bounce from here, I'm adding my exposure. That's me buying the dip, and I'm still within my personal portfolio and I'm taking the setup. If that stuff doesn't match up, you will hear me say, yes, this is a valid setup. I'm not taking it. That's the only difference there. And I will always tell you, I will always be honest with you. Am I taking the setup or not? Feel free to ask me. It does not change how confident I am in the setup. It does not change the setup entirely at all. If it's not a setup, if these two things don't match up, I won't pull out either of these tools. I will tell you straight up, there's no setup for me here, right? I will always be honest with you guys, always. So I want to get that out of the way. I want you to understand how these live streams work. My job is not to come in here and look for setups. It's not, right? I'm here to sort of give you an idea of probabilities and my analysis of the chart. In the meantime, I'm a trader. I do this for a living. I don't mind drawing out setups that I think will be solid. So I will always tell you this is a setup, or this is a setup that I'm in. This is a setup that I won't be taking. Whatever you want to know, I'm willing to share with you. But I just wanted to clear that up because I saw some confusion about it, and I don't want you guys to be confused. I want everyone to understand where we're at as a whole and what these live streams are. All right, so let's move on. All right, so right off the bat, Xcode wants link USDT. All right, so Xcode, you're asking me for what are my thoughts on the setup that you have drawn, and I literally have the exact same setup drawn. I think it's pretty identical, isn't it? Your entry is 40 something. Okay, so I think the only difference is you have your demand zone drawn here, and that's your entry, and your stop loss is here. It's about the same idea, isn't it? Very similar. And then you're buying 4-hour 200s as confluence. Yeah, that looks like a good trade to me. So, what are my thoughts on the setup? I think it's good, and so did previous Mercury. Old me thought it was good too because it's already pre-drawn. Let's see. FTM USDT. All right. I wonder if we can find a fib target. Probably not. Nope. I don't even know if I want to draw this one. Nah, I don't like it. We're just gonna rock without fibs. We can draw this fib draw. Yeah, I'm sorry for coughing the mic, guys. I'm still not 100%. I am gonna draw this fib though, and then all that gives us really, it's nothing to work with now, but it's just if we continue into price discovery, which this is an uptrend, higher high, higher lows on the daily chart. So it's very probable that we do continue into price discovery. If we do see that, then this sort of fib draw would be my targets. That's all that really is there for. Um, as for how does this look right now? 4-hour chart seems like we might come down to this 4-hour demand zone. And we have the 4-hour 200 EMA along with that. So that might be a nice region to sort of buy the dip. In the meantime, this did just confirm a bearish market structure, whereas previously we are making higher highs, higher lows. This is lower low, lower high, lower low. So you're going to downtrend probably into this region and then see if that region holds altogether. If I were to play this, I would probably want to buy this whole region like entirely and have a stop loss below that somewhere down here and then target price discovery. So I wouldn't just be a buyer directly at this zone. I would kind of be a buyer here, and if we go lower at like 55 cents. So that would probably give you an average entry anywhere in between those two regions. And then I would hide my stop loss, give it a pretty loose stop, and target new all-time high, or target all-time highs is probably supply zone here now. So you can target there. That's a 2R trade. And then just if we target the 1.618, that'd be a 6.6R trade. So I could see this as a valid setup and just buying this region and then this region. I guess we have plan A, plan B, don't we? Plan A is if we continue pulling back into this region, we can look for a higher time frame sort of swing long to get back into price discovery. And then plan B is if we flip this zone in the meantime, then we can probably just enter higher, look for whatever invalidation, maybe our market structure, maybe a lower time frame moving average, whatever it is, hide our stop loss below that. So just for the sake of argument, we'll keep it pretty loose, 15%, and then have the exact same target, right? 3R trade that way too. So plan A, plan B, both valid scenarios. Sushi USDT. Let's see. right, so that was there. I'm not sure why that's drawn. We're going to zoom in and look. We're going to keep this here because I'm probably going to agree with it anyways. So sushi had a very strong downtrend. We kind of broke that. This is a higher high. This is a higher low, higher high, higher low, higher high. So we're kind of uptrending into this supply zone. The supply zone is roughly like 1930-ish region. If we flip that, and there's probably not too much stopping us from seeing new all-time highs. There's no real supply anywhere in that region. So if you flip that zone, then the 11.09 fib from the bigger fib draw that got pretty well respected would likely get tapped from that point, and there's a valid setup that way. And again, similarly, just find anywhere to hide your stop loss on lower time frames, maybe hourly 200s, maybe 4-hour 200s, ideally, anything like that. And we should see continuation from that point onwards. Another 75% really is not too much to ask when you consider that this would be essentially price discovery. So who knows how high it could really go, right? But that's if we flip the supply zone. Until then, supply is supply, right? So if we come down, or if we sort of test it, and we might even want to redraw it, sort of go with what we had initially, or go with the new information that we've been given, or we come up to this general region, got rejected. Come up to this general region, got rejected. So maybe the supply is closer to like 1880-ish. We just have the exact same setup, but kind of closer. And then we'll zoom in, and we can go ahead and delete this now. So zoomed in, 4-hour chart still giving us higher highs, higher lows as well. If we pull back into these 4-hour 200s, that would be the ideal place for us to find that higher low. And it looks like we probably have some demand in that region as well. Zoom in. So if we got the continued pullback into hourly 200 MAs, 4-hour 200s, which are right here, and this demand zone, that'd probably be the ideal place to get long before another move up into this resistance. So maybe even a setup here where you're buying that region as a whole, and that's probably where I would want my stop loss. 2.2R trade, maybe that's worth it for you, maybe that's not. For me, that's definitely not worth it. CHZ USDT. All right, this is chop. Very odd chart. You could maybe even call this a range, but for the most part, this is sideways, and it is volatile, drastic sideways. What's the trend here really? I have absolutely no idea. Are we uptrending? Are we downtrending? It seems like we're downtrending. Then we get this higher low, whatever, up spike. Things look very good. And all of a sudden, we make lower low, lower high. Then we make higher high, and now this is all just one bleed down. So what's the trend here, truthfully? Absolutely no idea. So I call this chop. Zoom in, maybe that'll help us a little bit. So I would say that there is actually 4-hour demand in this region. So that's kind of what's holding us up as of right now. Would I be a buyer here? Not really. I mean, it's debatable. I personally don't like trading chop at all, whether it's long or short, chop is chop, right? And you're likely to, um, I don't know, be left upset if you're trying to trade constantly within the chop. It's much easier to just say, once we lose this zone, a bigger breakdown is likely. And from that bigger breakdown, we might even see 27 cents, 23 cents, who knows, right? Because at that point, we've built a lot of downward momentum. We're breaking down, these start to curl over, get bearish, lower lows, lower highs. So calling for lower is very logical at that point. You can reclaim those 4-hour 200s. Turn price action back on. They do get respected pretty well. Haven't seen them tested in a while, but once they did get tested, we saw the chop commence, right? We expected reaction, and instead we just got above, below, and in between. So they're just going sideways. So very much agrees with the initial analysis that we made on the daily chart. That's just by looking at trend and momentum. So similar to Bitcoin, I wouldn't dare say I'm a bear and I'm calling for 27, just like I wouldn't dare say I'm a bull and I'm calling for new all-time highs. When you're above these regions, it seems likely that you'll head up and continue the chop at the very least towards 59 cents, maybe even 67 cents. Once you've created some sort of trend, that's when you can start calling for all-time highs, right? Just like when we're below this region and this zone here, it seems likely that we'll head down to 47. Maybe we have some more demand here at 37, who knows? And you can call for lower, lower, seems more likely, more probable, right? But overall, I would expect the chop to commence. And that's just simply because we don't want to assume a trend on something that has no trend. One second, guys. I feel bad if you guys keep hearing me cough on the mic, so I'm trying to do my best. All right. Sol USDT, also very choppy. But this is not necessarily chop per se. This is actually a range. So ranges to me are still chop, but the range at the very least is tradable, and it's clean. It makes sense, or it should make sense at least. Come up to range highs, you're a seller. You come down to range lows, you're a buyer. Mid range, I typically stay away from trading the mid range. If we're above mid range, all that means to me is we're more likely to head up to range highs. If we're below mid range, all that means to me is we're more likely to head down to range lows. Once we're above the range, you anticipate more breakout, especially when you consider the fact that this is the all-time high supply zone. So if you're above all-time high supply, it seems likely that price discovery will continue and bears are dumb and all that, bullish argument, whatever, and you can just target, fib target, onwards and onwards for as long as that uptrend lasts. If instead, so many brushes, if instead you break up above the range or below the range, doesn't really matter, and then you fail to hold the trend and you instead come back down into the range, you consider that move a deviation. All that means is, since we're ranging, we expect range high, and then we're going to tap that, use it as resistance, range low. Range high, tap that, use it as resistance, range low. Range high, tap that as resistance, probably look for range low. So you expect range high, range low, range high, range low. Once you get a move out above, you expect expansion. When you don't get expansion, it means you got a deviation from what you initially anticipated, which was range, 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 over and over and over again. So I would continue to trade the range, just simply put. It seems like if we do come down to the range lows once again, and we might have 4-hour 200s to even be confluence with that idea. So if that happens, great. We can have confluence, we can buy range lows, look for mid range, range high. If we get the breakout, great. And if we break out above the range, we know that we're anticipating price discovery. If we break down below the range, that means we can probably look for the 4-hour 200s. If we volatile sell off, so 4-hour 200s, we break those, look for moves lower, right? Whichever way the range breaks, we probably don't want to fight it, but we're not anticipating a move in either direction. We're just anticipating the range. So you can kind of see choppy range, and this is why I don't trade the mid range, because typically all you really want to focus on are here and here. So when you start focusing on this one too much, the middle point, it ends up not mattering because look, we tapped range highs. Yes, we chopped around, got below, got above, whatever. Eventually we came down to range lows, right? So then maybe you were a shorter on the way up, but you're trading the mid range. So look at that. Eventually we come up, tap range highs. So I'm not really a trader here at these mid range points. Maybe for a scalp, just because you had hourly 200 EMAs and the demand zone is kind of confluence. Maybe a scalp, but nothing looking for swings, really, in my opinion. Right? And hourly 200s very much agree that this is sideways. No momentum here, no favor towards either side. It is simply when you're above range or range middle, you're more likely to go to range highs. When you're below range middle, you're more likely to go to range lows. And that's it. 1 inch USDT. All right. Sorry. All right. So 1 inch looks like it's currently bullish retesting daily demand zone. Very deep wick though. So maybe this daily demand zone is too speculative. Maybe it's not right. We would like to see confluence within that region to kind of give us a nice invalidation, but maybe the zone itself is not held up so well. We can actually even cheat a little bit, pull out our fixed range, and see what that gives us. So it's not bad. We do have this tiny little volume spike here. We might even want to move this lower a little bit. Let's just delete it. And we can say this is the real daily zone, right? So it's closer to that. So it's not huge, but it is definitely there. So it's worth marking. I think overall, though, the one really worth keeping an eye on is this one, where we had that POC just sort of below it. You had a ton of volume here. So if we continue pulling back, I'm watching this zone. I'm watching 525-ish. If we lose that region of support, we start closing that daily candle below it, which is significant since we haven't managed to do so yet in the past few daily candles. If we close this daily candle below this region, maybe that means that more downtrend is coming. We can watch for 525. Any lower time frame invalidations within this zone would be ideal if you want to have a setup here. If you're betting on this daily demand to hold before more price discovery, you probably definitely want some lower time frame confluence. A 4-hour chart, not too bad. 4-hour 200s. If you bought the demand zone, you might want to include this 4-hour 200s along with it. So I would say the exact same thing here as well, just because they are getting respected pretty well. So that's my true invalidation. So this is not a setup here for me. And the reasoning for that is because of what I just said. If you're buying this daily demand zone, which, yes, I do think it's a good buy. I think support is support, and this is a bullish retest, technically speaking. And this is higher highs, higher lows into price discovery, and bears look very dumb. While you can buy this demand zone, it doesn't make sense for me setup wise. Let me tell you. 1.618 is my first target. My stop loss needs to be somewhere below these 4-hour 200s. That's ideal for me. Not only does this catch that wick that we had on the daily just a few days ago, but the 4-hour 200s are my true invalidation, right? Not this demand zone. We're not respecting the demand zone. We're respecting the 4-hour 200s. If I put my stop loss just below the 4-hour 200s, we have just another 3% before coming down into major demand, right? So that means I probably want to have this demand zone within my stop loss as well. So now I have to extend my stop loss even lower than that and catch these lows. And now all of a sudden I have a 19% stop loss on a 1.8R trade. So that for me is not a setup, even though this region and this region look like good buys. Ideally, I'm a buyer here, and that way my stop loss down here provides me with a much better RR, right? So that's why there's not going to be any setup here drawn. JC's doing some live market updates talking about Bitcoin. Martian sent out a trade for ETH. Oh, wait, no. He said he's not certain on it yet. Well, let's take a look, Martian. So let's pull up what he has. He's got 6R trade, stop loss below this low, 380, 387, entries around current price, targeting new all-time highs. All right, so I think Martian is trading instinct here. I believe he also uses order flow, just a little bit. And I know Jacob trades off instinct as well. The best traders I know trade off instinct. And it's because they have all of that experience. They have that sort of behind them, and they can use that, and that sort of gives them an edge. Their experience in the market gives them an edge. I'm still relatively a newer trader. I've been trading for about 6 years. I have instinct, and when I scalp, I trade off instinct. But for the most part, I like to resort to my system. So for me, breakout above these 15-minute 200s again probably means that the pullback is over, similar to last time. That's not. This is a drastic sell-off, but this time, pullback over, and then more all-time highs. And in the meantime, probably look for a move down to these hourly 200s. Higher low on the 4-hour. And if we can find any sort of confluence to go along with that, that'd be ideal. That's ETH. And then Jacob's talking about Bitcoin. They swept liquidity. Yeah, they did. All right, so education. This is called an SFP. I do not know why it's called an SFP, because an SFP stands for swing failure pattern. In crypto, when you hear somebody refer to an SFP, all it means is this is a pivotal level, right, or a wick or a demand zone or whatever it is, and we broke that level, maybe it is the higher low that we need to hold for our market structure. Whatever this level is, in this case, it's just a wick. It is the low. When we break that, you expect that break to lead to further downside, right? We expect break below, what was it, 55K? That's point of control. We're probably going to continue downwards, break this low. Once we break this low, we probably break downwards between that and head towards 52.5K. Once you break the level and you close the candle back above it, it creates a wick behind it, and we call that in crypto an SFP, a swing failure pattern. Why it's called an SFP, I have absolutely no idea. It drives me insane because a true swing failure pattern in traditional markets is this is consistent higher highs, higher lows, price discovery, bears look dumb, right? This is a higher low. All of a sudden, we get this lower high. That's a swing and failed to continue the trend. So this is a swing failure pattern. It is simply we are uptrending. That's the swing. Whereas in crypto, a swing is, oh, we're looking at the 4.236. We break above it, close the candle back below, and it creates a reversal. So very odd. I don't know why they named it the exact same thing, but it's just the way it is. So when Jacob in live market updates says lows were ran, that's what he's kind of referring to. Steve says, hi, do you have a video / explanation of the indicators you use and their specific time frames to explore the trading environment to assess what trading strategy you wish to execute? Okay, hold on, wait. I'm not sure I fully understood that question. Let me reread it again. All right. I don't have a video or explanation of the indicators that I use, but what I use is very simple. It's very, very fifth grade technical analysis. I use market structure, and market structure tells me, are we uptrending, are we downtrending, or are we doing a mixture of both, which would be consolidation. So when you have lower lows and lower highs, you have a downtrend. You have higher lows, higher highs. That's really our next higher high. You have an uptrend. You have lower highs and higher lows. You have consolidation. All that tells me is the trend. That tells me what direction should I be looking to trade in. I want to trade in the direction of whatever the trend is, because it's more likely that the trend will remain the trend than it is for the trend to entirely reverse against you. So if we're trending upwards, probably want to be looking for longs. If we're trending downwards, probably want to be looking for shorts. On top of that, I use Fibonacci extensions as well as just the regular old golden pocket fib. So I use Fibonacci and I use my own sort of speculative TA where I don't use trend lines. Instead, I use gray boxes. I use horizontal levels. And for me, that determines where am I guessing that there's demand or supply. All of these regions, all the gray boxes, that's just me coming onto the chart and saying, I anticipate that there might be seller supply here or buyer demand here. And then in accordance with fibs, market structure, and horizontal levels, I use 200 MA, so that's simple moving average, and I use 200 EMA. So when we have something that is uptrending and we don't have to worry about fibs, we just kind of use those as targets as long as there's no resistance above our heads. And we have a horizontal level here, and our 200 MAs on any time frame are lined up nicely, then that creates a setup. And then I can use my speculative gray boxes or Fibonacci extensions or whatever it is to determine where my take profits are. And that's it. That's how I do my trading. I just combine those 3 or 4 things, and that's how I find my setups. It's very simple. I was talking to Xcode before the live stream started, and I said, I can turn your daughter, I'm not sure how old she is, but I can turn your daughter into a god tier trader just by using this very simple system because it's not hard to understand. The TA part of it is very easy. It really truly is. That's why you always see these chartists. That's why I like to call them chartists, where they have these nice, pretty charts, right? They have these trend lines everywhere going whichever way. They have boxes drawn. They have volume ranges. They have whatever, Fibonacci extensions, horizontal lines. They have the chart down and they can, have their justification for price going up, price going down, whatever. The true difficult part of trading is the emotional aspect, the, you know, psychological and mental aspect that comes along with number go up, number go down, not the chart part of it. The best traders I know, and Jacob is in that field, don't get me wrong. Jacob is in the tier of the best traders that I know. But the top 5 traders I know, Jacob's probably the only one that uses TA. All of my other friends, who are all whales, all 5 of them are whales. The other 4 don't even know technical analysis. I'm talking to them about demand zones, Fibonacci extensions, moving averages, whatever. They absolutely are clueless about all of that stuff. It's amazing to me. They just have a good context for the market environment and they know how to control their own emotions and buy Bitcoin sub 3K and then hold for 64K. And that's it. So it's the system, the TA part of it is the last thing you should be worried about. But I mean, that's coming from me, and my job is to come in here and do TA on these live streams and show you my charting. So, I mean, if that doesn't tell you, then I don't know what will. Can you talk about candle types that are detriment to changes and swings to help with scalping? Yeah, I'll be honest with you. I'm not the greatest candlestick trader, but I know the basics. This right here is a bearish hammer. And this right here is a doji. This is another doji. If you have another doji. So really, you need to know the reversals. But the reason that I don't put too much weight on candlesticks is because I typically don't see them used too well. If they move in confluence with an idea that you have originally, then great. But otherwise, I don't find them too useful. So like this is a bullish hammer, and this is the daily candle that we got afterwards. And this is another bullish hammer, and look at the sell-off that we got afterwards. I don't put too much weight on candlesticks. If I'm not good at something, it's probably because I don't find it useful enough to actually attribute time to learning it. So I'm not good at candlesticks. And to be honest with you, candlesticks, when you zoom in, are even less reliable. So you'll hear me talk about candlesticks every now and then. You'll hear me say that's a bearish hammer, that's a bearish doji, that's a, this bullish engulfing, whatever. but I don't pay too much attention to it unless it already agrees with an idea that I had ahead of time. And then when you zoom in, when you start trying to look for candlesticks on the hourly, 15-minute, 5-minute, stuff like that, they're even less reliable. Let's see if we can find some examples of that. Right. So this is a bullish reversal candle on the 5-minute, and you melted down lower high continuation. And so I do not use candlesticks. I can't really um, say how I would use them in reference to scalping. When I'm scalping, the shape of the candle has no real meaning to me. Look at the huge move up we had here, and we kind of just melted down. Right? Nice bullish doji, long wick on the end. You would think that reversals on the way, lower high and meltdown, lower low. So I do not use candlesticks for scalping, so can I show you candlesticks that are detriment to changes and swings with scalping? I cannot because I don't use them. Just to clarify, without fixed volume ranges, what determines where you place the gray boxes? It's what I see. It's horizontal region where I think there's supply or demand just because of how well it gets respected. So let me see, what's a good one that we can think of? Let's go to Sol. Back to that Sol chart. So we can delete the mid-range one. That's not a great example, but to give you an idea, why is this gray box drawn here? It's because we tested this sort of general region, and I know a lot of people would replace this with a line. That's perfectly fine. There's nothing wrong with that. I like to just think of it as a general region rather than a pinpoint level. So for me, it makes more sense in my head if I draw a gray box. And all that really is we came up to this general region and we saw a reaction, right? And then we come up above that region, see a reaction, and it leads to this massive move upwards. We come test that region again, and we see another reaction. So now I'm going to draw that gray box. We've gotten 1, 2, 3 times where this general region has acted as quote unquote support or resistance, right? And it's just this horizontal line where when you see price come to it, you see a reaction. And when you see price below it, probably means you might see a reaction. So that's the only way that I justify drawing the gray boxes. I'm just kind of looking for this region where we come up and we respect either as resistance or support multiple times. And that's it. Gustavo says, "Bro, your TA is so simple and so powerful. Can you explain a quick setup for the fibs? I know you use Golden Pocket, but just a quick overview how to make the fibs just like you have to save a custom fib on TradingView." Yeah. So my reasoning, let's just go higher so we can get away from that 11.09. My reasoning for why I don't have every fib drawn, if you're not familiar with fibs, fibs have 236, 0.5, 786, 0.382, and I think that's it. And they don't have this 0.65. So they have 0, 0.382, 0.618, 0.5, 0.236, 0.786, and then 1. So you have level, 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 level before you start using your fib extensions. And then we'll get into that in a second, the fib extensions that I like to use. So all these levels, to me, is just a lot of jumble. It's a lot of, it just makes my brain hurt. A lot of the times, it's not nicely spaced out like this. It might be like this, and you might have multiple fibs drawn. So let's say you have a low time frame fib, but then on top of that, you have a higher time frame fib. What's going on here? With all these numbers jumbled up, it literally, and I'm not kidding with you, I'm not saying this just to make you laugh, it makes my brain hurt. So I keep it simple and I said, okay, if I'm going to use fibs anywhere in between this high to this low, typically what are the fibs that I like to use? And to me, the 0.618 sticks out. That's the golden number. That's the golden ratio. The 618, 1.618. 618 is golden ratio. So that sticks out to me. Out of all of those fibs in the middle, that's probably the only one that I'm really going to use. So I turn all the other ones off. And then the 0.618 plus the 0.65 is called the golden pocket. So if you see Martian draw fib, he quite literally has these two colored gold. We'll just pretend that's gold. And, oh, the other one too. He literally has these gold, right? So it's called the golden pocket, and then all his other fibs are black. It's because this one has more importance than all the others. You'll often see Jacob use multiple other fibs. You'll often see Martian use other fibs, but that's the one we will all, if you ask all three of us, we'll all collectively tell you the golden pocket is probably the one that matters the most. So I turn all the other ones off because I'm very simple minded and I like to keep things simple. So that's my only reasoning for it. And then on top of that, once you start going above your one, you start pulling out fib extensions. There are tons of fib extensions. TradingView even has some turned on for you. 4.14, 3.272, 1.272, all those fib extensions, 4.64 or 4.764, whatever. I like to use 1.618, 2.618, 3.618, and 4.236. Those are the four that I rely on very heavily. If we go above the 4.236, that's when things are going very parabolic. You don't tend to see a lot of things go above their 4.236. The 4.236 is often referred to as the ideal top. It is the ideal region for if something's in price discovery or just looking for a leg upwards as a whole. The 4.236 is the ideal region for that leg upwards to end. So once we start going above that, that means you're probably in something like a bull market, like crypto is in right now. A lot of the altcoins that we're seeing are well above the 4.236s. Some of the coins have even gone above the 6.85 and the 11.09. And I have to draw a whole new fib draw, a whole new 1 to 0, and look for fib extensions from there. So it's ideal that you'll just only need the first, second, third, and fourth fib extensions that I use. And then once you go after that, that's when I have to sort of rely on, okay, this is overextended, this has gone parabolic, it's probably going to continue going parabolic. So let me look for 6.85 and 11.09 in the meantime. And that's it. That's the only fibs that I use. And then if you're drawing fibs from high to low, if you draw a fib from high to low, you're looking for resistance. Resistance, 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 resistance. That's all you're looking for. Why is that one turned on? Whoops. So you're just looking for resistance. If it comes back down, it's not a bullish retest of the 3.618 fib. If you draw from high to low, you're looking for resistance and resistance only. If a supply zone forms at the 3.618 and then you bullish retest, it's not that you're bullish retesting the 3.618, it's that you're bullish retesting the supply zone as demand that you formed because of the 3.618. So you draw from high to low, you're looking for resistance. You draw from low to high, you're looking for supports. So now golden pocket fib is acting as support. 1.618, we'll delete this one. Golden pocket, support. 1.618, support. 2.618, support. Typically, I stay away from drawing low to high for price discovery towards the downside. So you will it's not common for me to use fib extensions for the downside. I don't really see too much of a use for it because if something is downtrending into all-time low price discovery, I probably am not interested in it anyways. I'm probably not even going to bother charting it or looking for trades on it if we're downtrending into price discovery and I have to rely on magic numbers to justify my bias for why this is going to be the macro bottom before a reversal of the all-time low downtrend. So very odd for me to use fib extensions to the downside. So that's why very frequently you see me use them just as speculative price targets for the upside. I'm just riding the trend, looking for up and up only into these fibs. I'm going to scrape some profit, scrape some profit. In the meantime, if we lose our trend, then I can say, okay, maybe it's not logical for me to keep targeting these fibs. So that's how I use fibs. If you don't know what fibs are, I'm not going to go over that, but I will send you a 5-minute video that does a very good job of explaining it and explains it better than I can anyways. If you're interested in that, I can send you a link to it after the stream. Are the live streams available to download? I mean, I guess you could download it, but they are all recorded. And then so on the SP website, on the updates tab, when you go to your trading screen, there's a tab to the right that says updates. Um, all the notifications for like all the daily market updates and any trade updates, as well as all the live streams, are in that sort of tab. And once you go to that, after the stream is over, I'll go update the tab that says SP live stream 5/12/2021. I'll go update that and I'll link a YouTube video within that, and you can go watch it. So they're all recorded. Every single one is recorded. If you're interested in even watching old live streams for any reason, then you can scroll through. But yeah. All right, guys. Anything else that you want from me? It's been about an hour and a half. Time is flying right now. Doesn't feel like it's been that long. I think I've gotten so used to rambling that an hour and a half of just me talking is not affecting me as much. All right, well, if no one wants anything from me, then I will wrap this up. And that's not a threat, that's a promise. A quick look, what is Bitcoin doing? Not much. VChain USDT, almost came to this little scalp that we had. All right, so let's see. I think this is sideways for the most part. Really, it's an uptrend. It's higher highs, higher lows. So this is still a higher low. So you're still technically uptrending, but for the most part, I would say this is a choppy sort of grind upwards. So it's more like a upward slanted chop. So an upward slanted sideways, um, rather than a very strong uptrend. And I think that's just me applying the context of the situation, right? I think a lot of the market is just very uncertain at the moment. We're seeing a lot of things kind of just go sideways. But technically speaking, this is by all means higher highs, higher lows. So makes sense to look for longs here. With that, we had the scalp at that region, and I think that was just us trying to buy the 4-hour 200s along with that daily demand zone. So let's zoom in and see. It's more like a 4-hour demand zone, so not daily, my bad. But yeah, just buying the confluence demand zone 4-hour 200s. These 4-hour 200s do get well respected, very frequently used as local bottoms. So if we saw that exact same thing happen here, then it wouldn't be too much of a surprise, right? I would assume that if you tap the 4-hour 200s and then move on to reclaim this demand zone or supply zone as demand as well, and you know that your daily is saying higher highs, higher lows, once you get above here, what's stopping you from creating a higher high into this daily supply zone, right? Probably not much. So I would probably look for the scalp that we had into this region, where we're looking to buy that general region, and we're just looking to scrape some profit off here. You could look for close your trade here entirely, and that would have worked very well the first time. Or you can scrape profit off, look for the move above, reclaim, and then at that point, seems very likely that the daily trend will continue anyways, right? So you're trading probabilities, you're trading the trend, and you're kind of just looking for nice little scalps in the meantime. It's confluence of demand to justify that setup. Hourly chart is downtrending. But I would say while the hourly 200s are expected to act as resistance, they get very well respected. Local top, local bottom, nice little bounce, local bottom, local bottoms, local tops, get very well respected. So while they are expected to act as resistance on any moves upwards, they will also be confluence with the idea that we had that once you're above this region as a whole, you're probably looking for that bigger leg upwards. You're probably looking for another 20% or so into your daily supply. And then Serum USDT. Oh man, I'm trying to lose my voice. All right. Serum USDT. I like these fibs. They get very well respected. So if we continued, I would continue looking for 3.618. Looks like we might have even formed a supply zone there. 4.236, 6.85 for any further price discovery. And price discovery is sort of implied here, depending on how you look at it. You could see higher highs, higher lows, depending on if you count this as a high, low, higher high. And then this would probably be, I guess this is still a higher low anyways, isn't it? So we could zoom in and really make a probably better analysis. So I guess either way you look at it, this is still uptrending bullishly, still holding that bullish market structure. You just kind of need this zone to hold, and we might even be able to find some confluence with that. And we zoom in, and we have 4-hour 200s. How much weight can we put on them though? They got respected very well a few times, and as of recent, this is recent, we chopped throughout them. And then once we had this breakout, we kind of didn't really pull back, retest, or anything. We kind of just continued breaking out. So how much weight can you really give these 4-hour 200s? I'm not so sure. He previously got respected once upon a time very well to the T, but as of recent, it was very choppy. So conflicting sort of interests there, conflicting arguments. We might have like an hourly demand somewhere in this region. So if you're looking to buy this hourly demand, you do have the 4-hour 200 MAs as an argument, as confluence. but I wouldn't be looking to bet on this just blindly by itself because overall, the 4 hour is consistently making lower highs, lower lows. So losing this zone probably means deeper pullback into maybe 660-ish, be a pretty drastic pullback. And then in the meantime, this is more suited towards like a range. If we zoom in, we might even be able to find a mid-range as well. So range, range highs, range highs, range high, range high. Deviation. In the beginning of the stream, we discussed deviations. Deviation is you form the range, you anticipate the breakout above the range. Instead, you cross back below. Deviations on one side of the range tend to lead towards the opposite side of the range. So now that we got the deviation, this was the opposite side. So that analysis kind of held true. So for the most part, this is just ranging. So if you're buying this range low, you do have 4 hour 200s as confluence with that idea. Would I? No. I think the setup is there. It's not worth it for me. Just because, I will say, just because I don't know if these 4 hour 200s are really a valid argument or not. Because this price action definitely does not make me confident that they will hold up. So this could be, I can't delete that line. This could be a valid setup. And then, oh, that's right, we were looking for mid-range. Range is probably about here. So we're going to draw this little line in between and I'd even pull it down just a little bit. So resistance, resistance, support, 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 resistance. So if you're looking to take this setup, entry here, take profit, take profit. Breakout above the range probably means more price discovery. Breakdown below the range might mean 660. Ethereum Classic USD. Have a pre-dawn chart. All right. Why is there so many zones drawn? What the hell is going on here? All right, so all these fib targets is this high I can see on the USDT pair to the March COVID low, and that gave us some nice fib targets on the way up. So we almost saw the 11.09 fib tapped, and seeing a pullback from there is kind of logical. I wouldn't say necessarily expected, because when the trend is up like that, you expect the trend to remain the trend. But logical to assume that this sort of pullback is going to happen at some point or another. And if we came up into this 11.09 fib, that's the ideal place for it to pull back. So considering we got somewhat close in the grand scheme of things, I consider this a pullback because of this 11.09. So daily time frame does not help you. There's nothing here that helps you. All we know as is this was our higher high, this is our higher low, this is our higher high. So really, all we need to do is find a higher low in between current price and $25, and we're still confirmed trading bullishly. That does not help you, like at all whatsoever. All that tells you is the daily trend is still up. So now it's your job to zoom into lower time frames and say, okay, if we were to find a higher low in the daily chart, what's the ideal place to do so? So now we can zoom out, look at 4-hour 200s, don't really get respected, never even got tested as of recent, so we're not going to put too much weight on them. I would kind of just say play it level by level. If we lose this zone, or I'm sorry, if we lose this zone, we probably head down to this zone. If we lose this zone, we probably head down to these 4-hour 200s. If we lose these, you probably don't want to be holding this. So 4-hour chart, yes, it is bearish, bearish trend, lower highs, lower lows. So this does imply that this zone is going to break. Let's see what our lower time frames say. Hourly 200s, how much weight can we put on those? They're not terrible. And we use them as support here. So the fact that we're trading below them now is definitely not a bullish argument, especially when we consider the fact that our daily has some room to go and our 4-hour is consistently implying lower highs and lower lows. We had it implying we had this sort of consolidation and we broke down from that. So now it's lower high, lower low. So we're inspecting a lower high, or I'm sorry, lower low, lower high, lower low, potentially down into this demand zone. Ideal would be if we could find whatever was trending, this was trending along, and it's probably trending on the downside of it here now. It might be 15-minute 200s, might be 5, probably closer to like 15 or 30. 15. It's not perfect, but I would say it's probably what held us up to some degree. So the fact that you're below them, definitely not a bullish argument. Does not look hopeful for me. This has some room to fall. And if we hold this demand zone, we start flipping levels, we flip our 4-hour structure bullish again, higher highs, higher lows, great. Once we break this level, then it seems likely that we'll continue into more price discovery. Until then, lower time frames are very bearish and daily has some room to go. Clearly, we can drop 70% and still technically be bullish. Hot USDT analysis. Let's see. Yeah. All right. Give me 1 second. Let me do hot. Oh. All right. So hot is now downtrending on our daily time frame. So previously it was higher highs, higher lows, and I believe this is price discovery. Yeah. Higher highs, higher lows, price discovery. Bears are dumb. There's not really any bearish arguments here. And now it's gone to lower low. I'm sorry. This is still a higher low. This is still continuation of the bullish trend. Sorry. So higher low, lower high, and then downtrend. Bearish retest, lower time frames are definitely downtrending. We don't even need to zoom in, but this has flipped market structure bearishly. So we're now downtrending. Then when we zoom in, you can see that with your 4-hour 200s, didn't quite get used as support, but now that we were bearish retesting them, did see them hold up. We saw them hold up as confluence with this daily supply zone that we have drawn. So Ton of resistance in this region, just like this region. If we come up and test that, still going to be confluence, lower highs, lower lows expected, and more downtrend. So at the moment, I'm going to say as long as we're below this region, the 4-hour 200s, and this region, it's more likely that we head down to this demand zone at 87. What even is that? 8/10 of a penny. I'm not sure what's the best way to say that, but you get the idea. This demand zone, similar to that tap. Use that, and it's just simply expect lower. Expect lower until strength is shown. Strength is not the percentage that something bounces. This is not strength. This, I mean, this strength, not the percentage that something bounces. That has absolutely no relevance. Strength is, are we reclaiming levels? Are we flipping the structure bullishly? Things like that. And this scenario, it was no. You got 100% bounce. It meant absolutely nothing. You bearish retested, and here you are downtrending again. SXP USDT, and then you wanted Matic USDT. I didn't forget. I got you. Okay, so you're looking for fib targets. I'm going to try this. Actually, we might as well just use this high, right? This high. Let's try this low. Let's see. Does this get respected or not? Yeah, it did, but we're above our 11.09 fib, right? So now we have to find a new fib target. And the one that sticks out to me is just simply this high to now this low. So 1.618 did not see anything. 2.618 saw a bit of reaction. Actually, a pretty solid reaction. So now I would just be targeting these fibs from here on. 1.28, 145, 219, and like 340. That would be my next fib targets to work with. You already know this is higher highs, higher lows, price discovery. Bears look very dumb on all time frames. I want to try and find what's the true like invalidation for this. When can we say that this is really starting to go bearish and probabilities no longer are in our favor? And I can't really find anything too clean. Huh? No, it looks very bullish on every time frame. Bears are looking very, huh? No, I wouldn't be in a rush to sell. I think it's, just like every other thing that we play that's in price discovery, it's just assume that the next fib will get hit, right? So the 2.618 gets tapped. We saw a very nice sell off. So you were a take profiter there, great. Maybe you can find somewhere to add back in, maybe not. Assume that the next fib gets hit over and over and over again until it stops happening, until whatever the trend is gets lost. So that's what I was trying to do. I was trying to find what is the true trend? What is our invalidation? When can we say that we can no longer expect more price discovery? But for the upside, it is simply just look for fib. We break that fib, look for next fib. We break that fib, look for next fib. I would not be in a rush to sell. um, I would just continue targeting price discovery over and over and over again until something gets lost. I'm not sure what it is. I can't find any sort of justification. Maybe it's 4-hour 200 MAs. Maybe it's 2 hour 200. I'm not really sure. I can't say honestly what would my invalidation be for this trade. Maybe just breaking this structure. Once we break this sort of demand zone at 72 cents, that's probably maybe when you want to call it quits and say, all right, maybe it's no longer logical to continue looking for 4.236, 6.85, so on and so forth. But until then, you're just kind of riding the wave and saying, all right, let me scrape some off so that if we do come down and eventually lose this demand zone, then I at least took some profit much higher. Right. And then we go up to 3.618 and you say, all right, well, let me scrape some more off because there's some room to fall. And maybe we do come down and break this demand zone eventually. And that's where I'll kind of cut my position entirely. So let me set myself up for success in the meantime and look to scrape some off. And then you just continue that process over and over and over again. It's not as clean for Matic. There's not really a true level of invalidation. Like for ETH or for Sushi or for a lot of these other coins, it's just 4 hour 200s, hourly 200s, whatever. It's very clean. It's very easy to see. But for Matic, uh, I want to attribute it to just how parabolic it went. There's not really a clean level, just not very clear level of invalidation where when you're below it, you're very strongly bearish, and when you're above it, you're very strongly bullish. There's nothing like that for this coin. All right, and then SXP USDT. One second. All right. I can't wait to be fully 100% again. SXP, this is kind of jumbled. So let's go ahead. Well, first, let's just notice the fib targets, right? This is uptrend. I know this is a lower low, but we formed a higher high. So that kind of invalidates this, in my opinion. I'd say this is sort of just a deviation between the uptrend that we had prior. So deviation, higher high, bearish arguments no longer valid. So it is kind of higher highs, higher lows into this was price discovery, right? So price discovery, bears are dumb, that whole spiel. So we're just looking for 1.618, 2.618, so on and so forth. For lower time frames, we have this kind of confluence with the 4 hour 200s, which get pretty nicely respected. Acted as local bottoms multiple times, little slight deviations below them, but nothing too crazy. If you're buying 4 hour 200s, if you have a pretty loose stop loss below them, then 4 hour 200s were usually more than not a good buy. We come break down below them, we start seeing them get used as resistance. And we have a bunch of confluence to go along with that. We have this a bunch of daily and 4 hour levels. So 4 hour 200s at the moment getting respected, still holding candle closes above them, and we even managed to bullish retest this daily demand zone as well. So pretty nice price action here, I would say. Um, Once you break this 4 hour structure bullish again, because it is lower highs, lower lows, if you can hold a higher low and then come up with a higher high, then that means this was probably the bottom, just as it was here and here and here, and even when you broke down below and then reclaimed here as well. So reclaiming, shifting the structure bullish again, shifting trend bullish, reclaiming levels, all that, showing strength probably means that this would have been a great buy. In the meantime, I'm probably a buyer at the 4 hour 200s as well as at this demand zone. So there might not necessarily be a setup here for us. similar with, I can't remember what was the other coin that we had. So if we had a setup, I would probably want to have my stop loss below this wick, or maybe just well below the demand zone. So let's just say this for the sake of argument. That's our average entry. We're buying 4-hour 200 MAs. We're buying the daily demand. And we can target, looks like we have supply here. Now this is starting to get really choppy. We have a bunch of levels drawn. Just bear with me. We can target, we have supply, supply, and then price discovery. Right, so that 1.618. So you have buy this region, target, target, target. And 8R trade, but at the end of it all, you'd probably end up with like 3 or 4R with those first two targets. But that's plan A, right? It's plan A. And then the plan B is we reclaim levels, right? We reclaim trend. We shift trend bullish again. We show the strength. And we know that bears look very dumb on high time frames. So we're trading probabilities either way. So after reclaiming this supply zone, you can probably take the exact same setup, but just higher. Right? So we said target, target, target. Yes, it's an 8R trade, but at the end of it all, you might end up with 3 or 4R because you're scraping off profit in the meantime. Whereas you enter here higher, you have a pretty loose stop loss. You have it below some demand zones. At that point, it's probably below the 4-hour 200s as well. So you have a good invalidation and you get 3.5R anyways. And you're just simply looking for entry, and I'm going to look for price discovery. So solid setups either way you look at it. Go over Ethereum Classic USD. I actually just went over it. I'm sorry if you missed it, but I'm not going to make everybody rewatch it. This is recorded though, and if you want, I can send you a timestamp to the recording afterwards. All right, so theta, we're probably better off looking at this on the 4-hour chart alone because the daily is honestly truly just chop. This is consolidation. We break out. Now we have higher lows and higher highs, right? So now we have uptrend. From the uptrend that we expected, we got this meltdown of a lower low. And then lower high, higher low, higher high, lower low. So what is the trend here? The trend is not having a trend. Sideways. Chop. Making you think that we're going to this 11.09 fib at 1730, and then the next day making you think that we're coming back down to the 750 daily demand zone over and over and over again until the real move happens. So the 4-hour chart probably gives us a better idea of the intraday price action. And I'll go ahead and mark out, we have 4-hour demand here as well. So the 4-hour is truly chop also, but it's just a much tighter chop. Instead of chop between here and here, it's just chop between here and here. Right, so 1170-ish and $10 region. So this is demand and this is supply. Once you're bashing away at this, it's more likely that you'll break down and see the bigger breakdown. Once you're bashing away at this, it's more likely that you'll see the breakout into supply zones, into price discovery. For the time being, it is simply just ranging, chop, consolidation. That's it. So This is not something that I want to trade. And since we're below the 4-hour 200s, which do get very well respected, we just bearish retested the range high, and we're bashing away at this demand zone for the 1, 2, 3, 4, 5, fifth time. I'm not a buyer here. I'm not interested in buying this region. I'm interested in if this shows strength. And then I can look for price discovery and moves higher. Simply put, a move, a bump above this zone likely sees a move up into this zone at 1360ish. I would have told you the exact same thing back here. Didn't quite get there, but it is what it is. And when you're below that region, it's more likely that you head down here. So that's all we're seeing. We're just seeing range low, mid range, and maybe even, range high, and then maybe even a breakout towards that higher up supply zone. All right, Reef USDT. This looks like it's going to be range as well. Yeah, I can tell you it is. It is definitely a range. Sideways chop. But all ranges are chop, right? But the difference with ranges are they're clean. You can trade them. You know that this is a sell zone. You know that this mid-range might be a nice little scalp region. You know that when we're below the mid-range, it's more likely that we head down to this demand zone. You know that this is a buy target, right? And you just keep trading that over and over and over again. And maybe we deviate. Maybe we deviate below and then reclaim. And then from here, you can look for range highs. Maybe we deviate above and then re-enter. And then from here, you can look for range lows. And you just keep trading the range over and over and over again until it resolves. And resolving means we finally break above and actually break out and expand away from the range. Or we finally break down and actually break down and expand away from the range. Just keep trading the range. This was most definitely a sell, just like it was the second time around. Just like this will be a buy if it gets tapped, just like it was the 1, 2, 3 other 3 times. So in the meantime, might be able to get a nice little move down into the mid range. Maybe 4-hour 200s are in agreement with that idea. Me personally, I'll tell you straight up, I do not like trading the mid range. I absolutely do not. I don't enjoy taking swing trades and then tapping the range highs, or even if we reclaim and then head up for range highs. If I'm not already in from range lows, I'm not looking to swing trade my way up from mid into top or from mid down to low. So personally, it's not something I'm interested in. Hourly 200s get pretty well respected also. So I will say, given everything that I just said, how I don't like trading mid range, this general area does have a lot of confluence. 4-hour 200s, hourly 200s, and then, of course, the mid range. So you might get that move back up here. The real fun starts when you break out above this range, and then you can start looking for price discovery. Actually, let's take, no, let's take this range high. There we go. Did I not get it? Oh, I double clicked. Damn it. Technical difficulties. All right, there we go. There we go. Yeah, so the real fun starts when you break out above that range, and then you can just start targeting fib targets. Scenario, I got RSR at 0.086, forgot to put a stop loss. What would you do? Oh boy. This is terrible price action. This is chop on a chart, 100%. There is absolutely no trend here. There is no logic to this price action. You will not find me making a bet on any of this. There's nothing here for me. The daily chart is ugly. It's not ugly because it's bearish, it's just ugly in general. What would I do though? I'd say we're at 4-hour demand. And if your entry is 0.086, you entered on a reclaim of these 4-hour 200s essentially, or what you thought would be the reclaim before the move up into here. So, in my opinion, if this wick, or maybe even just this wick, was not the low, that probably means that we're continuing the downtrend. We're continuing this lower high, lower low. This is the deviation. We had the higher high, but then this is a lower low, lower high. So really this is lower highs, lower lows. Right? That's why we always wait for when we get the break in structure, we get the higher high, you want to watch for the higher low first and then assume that the trend has been confirmed up. Whereas this just kind of broke and we're still downtrending because the break in our structure meant nothing. And here we are making lower highs and lower lows again. So essentially, what I would do from this point is if this was not the bottom, meaning this support tap was not the low, and this doesn't end up being a higher low before the reversal, then I don't want to be in this. Because if that is not the low, just looking at our 4-hour structure, just looking at the choppiness, the range, the sideways, the lack of logic, breaking here probably means another 12% or so into the next support level, right? Or more probable once you break this zone to enter to this zone. So, simply put, we lose this region. I would not want to be in this. I would think we pull back another 10 to 12% afterwards. Let's see. And then, man, this is so choppy. It's so just weird price action. Yeah. You can start to feel comfortable if we hold higher low and then create higher high. Then it looks likely that we might see another move up, potentially into 9.5 cents. But until then, it's kind of just, since you're entered from so high up, I would just be praying that this zone holds. And if it doesn't, cut my loss, take my loss on the chin and move on. That's what I would do. I look at CKB USDT. CKB. Never even heard of this. Oh, this is relatively new. All right, so take everything that I'm about to say with a grain of salt because I don't enjoy charting relatively new coins because there's just simply not a lot of price action for me to work with. So in trading, one of my biggest downsides is when we move into price discovery, I don't have a lot to rely on because I don't have previous levels and maybe my moving averages aren't moved up close enough to price action, stuff like that. So trading price discovery where there's uncharted waters is difficult for me because I'm a price action trader. Just like trading something that's new and just got listed 3 months ago is also difficult just because there's not enough price action for me to really work with. Um, with that said, we are currently uptrending, higher high, or I'm sorry, high, higher low, higher high. So if our lower time frames agree with that, then this might be pretty solid. And like I said, um, when we're in price discovery, my moving averages might not help me because maybe they're not close enough to price action. In this scenario, it's my moving averages might not help me because I'm not really sure how much they truly get respected. Yes, this is very frequently used as local tops, and it seems like they got respected very well. So with that in mind, maybe bullish retesting them sees them hold as support before another leg upwards. But to be less speculative, I want to say I can't really make that analysis because I have a low sample size. I don't really know how well these 4-hour 200s actually get respected because I don't have any price action to work with. This is all I have to really see. So take that with a grain of salt, definitely. I do think there's 4-hour demand in this region. So if you want to say these 4-hour 200s might hold up as support, you can kind of use this as confluence to that idea. So that way, if you're buying this general area, then maybe you just want to hide your stop loss below here, and you can make your bet on that from there. And as for price targets, so relatively new. So if we're going into price discovery again, then these are the fibs that I would like to use. 1.618, 2.618, so on and so forth. So this could be a valid setup. It's very speculative. And I only say that because it's such a relatively new coin. So I don't trade new coins. And then, yeah, hourly 200s, do they get respected pretty well or not? You can make that decision for yourself. If you want to say yes, then there are additional confluence for you. I'm not really sure because of things like this. So it's not the worst that we've seen, but not the best either. And then Prom BUSD. All right, so literally everything that I just said, apply that to here too. Not a lot to price action for me to work with. Fib target. Remember how we were just talking about 4.236 being ideal top? Well, that applies for here too. So 4.236 got tapped and saw a pretty nasty meltdown from there. Ideal top, and this is actually a full downtrend now, depending on how you want to see it. Lower high, lower low. 4-hour chart, and 4-hour 200s. How well do they get respected? This is just chop, right? And then so expecting them to hold up here is dishonest of me. It's not fair to say that they'll hold up here when I don't have any previous history to back that up. Then hourly, and again, hourly 200 MAs don't really help me. There might be maybe a demand zone here. But hourly 200s don't help me. We tapped 4.236. That's the ideal top. We're clearly downtrending, lower highs, lower lows. So I am expecting to buy back lower. And in the meantime, if we see strength, if we see uptrend, if we see levels get reclaimed, and levels would be this little hourly supply here, then I can assume that my buy targets lower are no longer valid. Looking for lower over and over and over again is unlikely, because at that point, price is very strongly uptrending, and we can fall back to looking for fib targets again. So, to be honest with you, I wouldn't touch this with a stick right now. But if that changes, then who knows? Can we look at Ply? I don't even know how to say that. All right. What is this? Iron. Oh, it's on Bittrex. All right. I need to hurry up and wrap this up, guys. I'm very sorry. There's definitely daily demand here. 200 dailies are confluence with that, but again, don't really get respected as of recent. I mean, this is breaking into all-time highs. As far as I can see, well, you said you have a bag from 2 years ago. Oh yeah, so you probably have a bag. Yeah. So I mean, this is probably all-time highs, right? So I'm gonna just take this fib, see what that gives us, and we could say 1.618 and 2.618 and maybe even 3.618 would have all gotten tapped, so that would have been nice take profit levels. I would say there's definitely supply in this region. Sellers are most definitely willing to step in anywhere around here, and buyers are probably willing to step in at this lower region. So sideways for the moment, right? And then simple analysis, we come down here. You want to see that hold up as support. You break that, you're probably heading down into 200 daily MAs and this lower, bigger daily demand zone. Whereas if you break up, you're probably heading up into 3.618, 4.236, more fib targets, more price discovery. So really, I'd be watching for a daily close. I'd be watching for daily close above this level. And if you haven't taken profit, then these levels were definitely good take profit levels. So you want to do with that information, up to you. For the most part, though, this is truly chop range sideways. And you can see that in our 4-hour 200s alone. They don't favor either side heavily. They went from strongly uptrend to now they're just neutral. So they're going to continue being neutral for who knows how long. And that's kind of just what you want to expect. Zcash, BTC, and USDT. Let's do BTC first. What is that? Oh man, look how long it's been since I looked at this chart. I used to have green boxes. I want to say that there's daily supply here. There's probably daily demand here. And we might just want to throw a straight line. Move that just a little bit lower. And all I'm seeing is we have this like little daily resistance where it gets tapped, tap, tap, tap. And then we're using it as support. We kind of chop through it, but tap, and here we are tapping it again. So maybe some sort of resistance here too. But all in all, this looks like it's approaching this major daily supply zone. And I think the real fun starts once you reclaim that as support. Because once you reclaim that, there's not really too much here. There's no level of supply. I mean, there's a few that you might be able to find. There might be one right here. And there's probably one somewhere in this region. And so we can pull out our cheat tool, right? Very much agrees with everything that I just said. Look at the volume here. There's not much. There's nothing here. So reclaiming this region, that's really where you have your last peak of volume spike. So above that, what's really stopping you? Probably not much. So it does very quickly enter that sort of bears are dumb, higher highs, higher lows sort of mentality. And it's not necessarily price discovery. It's just that there's no supply here. Sellers don't really, I mean, there's nowhere for sellers to all step in confluently if we're bullish uptrending on all time frames at that point and we're reclaiming major levels. So this has the potential to look very good. In the meantime, we need to zoom in for any sort of pullback entry. So ideal pullback entry was definitely here. Bullish retesting daily demand as well as bullish retesting 4-hour 200s. If we bring that move down now, we'd have to break structures. So it's not likely that we pull back. So seeing some sort of pullback without testing major resistance, very unlikely. Let's zoom in even further. Hourly 200s, bit choppy. When we get trending, they start to get respected. And once we start to go sideways, as you see with a lot of stuff, they start to get chopped up. Oh, did not mean to do that. For the moment, this is still very trendy. So if we pull back, still looking for a higher low on the 4-hour, looking for that pullback dip into here. But truthfully, more than anything, I am interested in if this reclaims that region. That's probably when the real fun starts. And then you want USD pair as well. What's the best exchange to do? Let's just do. Let's try the Binance one because they tend to have a lot of price history. Yeah, so this goes back to 2018. All right, so we're going to do a fib draw, but we're not necessarily looking for price discovery. I'm more interested in the golden pocket. So golden pocket is like 570-ish, 550-ish. So that's what I'm mainly looking for. And then as for levels, this is kind of odd too. There's not really too much here. I really don't know. We might need to zoom out to the weekly and see if there's any weekly levels. All right, so this does look like a weekly level. Now that we've zoomed out, probably say that there's weekly demand in that region. Is there anything else that we need to mark out? Might be another one here too. All right, so now we see it as we're coming up into weekly supply. We know the BTC chart is kind of at that daily resistance, and weekly levels can deviate quite a bit. So if we pulled back from here, probably wouldn't be the biggest shocker in the world, right? But this is by all means higher highs, higher lows. So we're uptrending into resistance We're not bearish retesting resistance. That's the context here. So more uptrend is actually implied. If I'm in this is probably a take profit. This golden pocket is a take profit. And from there, I'm looking for 1.618, 2.618, 3.618, or you're just zoomed out and looking for the BTC pair and looking for resistance levels on that. Either way you want to do it. But this is definitely strength on a chart. It's a very strong trend. 4-hour 200 MAs. It's not perfect. Every now and then we get this little deviation below. This wick pretty far below. But for the most part, not much of a bearish argument unless we're below them. Right? Same exact thing here. Trended along them very nicely. Started to lose them. That's when we start acknowledging the bearish arguments. See very strong downtrends from there. And then we get chopped. Finally, we get uptrending again, and we see them get used as local bottoms. So truly, no bearish argument, nothing that would make me think that there's a bigger pullback on its way. Yes, we're at resistance, and resistance is resistance. Respect that, but we're uptrending into resistance. So if we keep going, don't be surprised. As for setups, I don't see any setups on this for me, unless we have a very deep pullback, which I just said is not very probable. No worries, man. All right, guys, I'm going to go ahead and get out of here. I'm kind of losing my voice, but nonetheless, I appreciate you guys coming and hanging out with me. Thank you as always. I hope you got some value from the stream. And yeah, well, I'll see you on Friday. We're back on Friday. I'm not sure what time yet. I'll announce it. But yeah, take it easy, everybody. I'll see you on Friday.